This is Series 2, Episode 9. Today is the 7th of February 2022. So in my video yesterday, I asked for some feedback. I said comment below if you wanted me to do a separate video on where I can see the money going in the stock market. So you guys commented, so thank you for that. Thank you for the feedback. So this video is for you. You asked for it, so I spent the last few hours putting this together for you, so at least you can make an informed decision as to whether or not you want to buy these stocks. Now, all of these stocks are in the oil and gas sector because that appears to be the strongest area, that and general energy stocks at the moment. So this will cover 7 individual stocks. Some are more higher risk than others, but they are all in the oil and gas sector. Here is my disclaimer. Everything I talk about in this video is for informational purposes only. If you decide to take action upon that information, that is your decision. You are responsible for all of your trading decisions. So the first stock I'm going to talk about is this one. Ticker symbol WMB, the Williams companies. Now in all of these stocks, what I'm going to do is start with the weekly chart, just to show you the bigger picture, and I'll delve deeper as I go for each stock. I suggest you get a pen and paper if you really want to take some information down, because I'm going to be covering a lot of information. This will get quite technical, and I'm going to mention a lot of dates because of the earnings reports. So get a pen and paper and I'll get started. So this is the weekly chart for this company, and as you can see I've drawn in some patterns already. So this is your cup here. This never formed a handle. It went up and then came down again. And this time, so we've got a cup here followed by a cup and handle pattern. So this looks really powerful, and this is a strong stock with strong fundamentals, and like I say, it's in the oil and gas industry. So let me just go down to the daily chart now just to show you a bit more information. Well, this is the weekly cup followed by cup with handle, double base. So this has already broken out of a cup of handle pattern. The official buy point on this was 29.94, which is 10 cents above this high here. So here is your cup, here is your handle, here is your entry point just here, and you can see it's breaking out. So it's broken out of its base and cup. So this is now officially a buy, but me personally, I always like to get in a bit of a safer area. So honestly guys, this might be too late, so I'm just going to explain. Now I don't want to take a stock at this high area here. I would like to see a retracement, and my perfect entry on this would probably have to be down here somewhere, so 28 or lower. But you can see it's already breaking out, so you could potentially trade this as a breakout stock, because it is breaking out and it is an official breakout stock in a strong industry. If you were to do that, that's up to you. You'd have to probably bring your stop loss a bit closer, and I just can't see a really safe trade on this at the moment. So what might happen on this one, it might come down a little bit to here around 30, and you could potentially put your stop loss here, but I don't know with this one guys. It is breaking out, but it's a bit high, but I'm showing you anyway, just in case you wanted to take this breakout trade, because it is officially a breakout. You can see the volumes increasing down here. Nice lot of interest here. Look at the trade volume, 10.4 million, 10.04. So yeah, that looks good. And as I say, it's already broken out. It's up to you if you wanted to jump in on this now. But like I say, I'd personally like to see it a little bit lower. Okay, let me talk about the next stock. So this next one is ticker symbol RTLR. Now if this is the weekly chart again. I've drawn in this horizontal line with all these arrows, so you can see, look at this, where price was, and then you can see price kept attacking this level, bang, 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 eventually breaks through the level. And as it comes back down, it should often act as support, but it didn't. So what's happened with this one, and this is again the same sector, it's created a cup and handle. So I just wanted to show you the weekly chart first of all, and this is where your pen and paper comes in handy. Look at this level. This is, it says on here $11.72, but make a note on your piece of paper, $11.50. That is the perfect entry for me on this stock, and I will show you some more detail now. So I'm going to go down to the daily chart on this stock now, but make a note of that weekly chart there, and obviously you can watch this video back and you can see how often those touch points have been hit by this stock. So 1150 is the key figure for you to write down on your piece of paper. Now let me go down to the daily chart. So my favorite pattern, cup and handle. Official buy point on this one is $12.75, which is 10 cents above this here, and you can see we've already broken out. So this is another breakout stock, and it's got nice fundamentals on this one. So look at this, guys. Pay attention, please. I talk about this all the time. This is exactly what you want to see. Look at this volume. Huge volume spike as the stock breaks out. So it breaks above its handle on huge volume. Very, very good sign that this stock is under accumulation by professionals. And you can see it's hovering around here. It's going backwards and forwards. It has officially broken out. Official earnings is due on this one on the 23rd of February. So bear that in mind. But this is now a very, very nice cup of handle breakout. Look at that volume, as I keep saying. Very, very nice. Now, where do I see the perfect entry? Personally, as I said just now on the weekly chart, $11.50. $11.50. Why? Because that's at the bottom of this handle here. And then that, honestly guys, if it carried on going lower below that, just you could take the loss and out, or you look at it as a longer term position and have your stop loss down here below the base of the cup, down here at around $10. So having a $10 stop, if you got in at, say, I don't know, $12 or lower, that's a big stop. That's 20%. So remember your money management rules. It's entirely up to you how you trade this stuff. I'm just showing you what I'm seeing. This is a beautiful looking stock, strong fundamentals, strong sector, lovely technical pattern here, and earnings is due again on the 23rd of February. So hope you watch this video again, because it's a lot of information here to explain each stock. Right, over to the next stock now. So ticker symbol CTRA. Earnings is due on the 24th of February. You'll notice that they're all very close in their earnings reports. So CTRA, this is a weekly chart. Now again, slightly different setup here. This is a consolidation. So if you look at this, this appears to me as a flagpole up, and then this is your consolidation. I'm doing this really roughly, but you get the point, hopefully. It looks like a flag formation, consolidating, trying to break out. So let me just get rid of that because it's untidy. Now I've drawn this arrow here and these arrows down here just to show you where the support and resistance lines are. Now look, the market had a pop at breaking out here on last week. So Friday. Let me go down to the daily though. Let's have a look at a bit more detail on this one. But there is your key resistance, key support. So get your piece of paper ready. I would say you want to get ideal entry on this one would be to see if price breaks out now, then it might just move. But the safest entry for me would be below this $20 level, which is around $19. This support on there. So make a note of that on your piece of paper or watch this video back again. Now it might just break out, guys, and you just don't get the trade, but I'm just highlighting all these different setups. And if I look at this here actually, so the official buy point on this one is $23.74. So we have actually confirmed, I've got a confirmed breakout on here, but it's a spike. So let's have a look at the daily chart now. Let me just go down to the daily, have a look at that. So daily chart, yeah, this long wick here on a small body looks like it's going to reverse for a bit. Don't know how long. So I wouldn't want to take this up this level here. So yeah, okay. I like it. The fundamentals are good. I've already checked all the fundamentals. This looks negative here. I think it's going to come down, and this could be your opportunity to get in on this stock if you wanted to. So I'm saying ideal entry would be to test this level here. because it's just so safe compared to, you know, in the middle here or something. I don't know if it's going to go back down there, guys, but that is the safest entry, because that's a very, very strong move very quickly. Let's take a look at the volume down here, because that is important. Okay, we're starting to see more volume coming into the stock. Interesting looking. I just don't like that bar there. That candlestick shows a bit like it's going to reverse lower. Like, you see one here, and what happens? It just reverses. So it's up to you guys. Like I say, perfect entry here, because that is where your major support is, and then you could get your stop loss, say there. So that's another strong stock in the same industry, strong fundamentals, and as I said previously, the official buy point's 23.74, because that would be this breakout. So it has already broken out. I just always like to get the perfect entries. So there it is, CTRA. Now over to the next stock. So SM Energy, talked about this in episode 4. I'll put the link up in the top right hand corner. Earnings is due on the 17th of February for this stock. I have already talked about it, and in episode 4 I said the perfect entry would be $30, and it did. It held at $30 and rallied, so already that's up 20% since I did that video. I actually got in at 35 for a small position here. So I own this stock, SM Energy. I like it. Fundamentals are strong again. But yeah, I did talk about this stock in detail in episode 4. So a reminder, earnings is out 17th of February. But let me just show you the daily chart quickly. In that episode I said this was the perfect entry point before it happened. It was up here, it came down. This was before it came down. I said perfect entry $30. Have a look at the video. And of course it's rallied since then, and you were up. If you took it, you were up 20% now on that stock. But it is trying to break out. Now the reason I'm saying that is, again, look at this. Price action is key. We have a long nose on this bar though, so it looks like it could be about to come down a bit. But I like the fact that the market tried to break out. You see the volume suddenly starts rising there as the price broke through above this cup base with a handle, very steep handle. But like I said, I own this stock, so I'm in it already, and yeah, it's been a bit painful here. But if I actually took the entry that I talked about in the video, then I'd be up 20% myself. Never mind. There it is, another one, guys. SM Energy. So one to keep an eye on. Perfect entry, $30. Now before I start talking about these next stocks, there are 3 of them. Now these next stocks are more high risk, but they're lower price stocks. The fundamentals aren't quite as strong. I'll talk about them anyway, and you can make a decision if you wanted to take any of them. So they are not as strong as these previous ones I've just talked about. All the stocks I've just talked about are all strong fundamentally. These next ones are not quite as strong. So let me pick up the next stock now for you. So first one, this is a weekly chart again. Ticker symbol REI, Ring Energy. Now this is a messy chart because I wanted to just point out a few things. This line here represents support, this line here represents support, resistance, resistance. I know it gets a bit confusing, guys, so I don't want to make it too complicated. But you'll see I've drawn in some arrows, etc. So just want to give you the bigger picture first of all. This is definitely more volatile, definitely more risky, but it's a lower price stock. So it's one of those, if you get it right, it could make you a lot of money. If you get it wrong, you'd have to get out pretty quickly. So let me just delve down to the daily chart now and explain what I'm seeing there. Earnings is due on this one on the 16th of March. So you have quite a bit of time on this one. So what do I see? I'll leave those lines in, but you see the arrows? Look, this resistance, price falls away. Resistance, price falls away. Price comes up here, creates a high point. That becomes resistance. Price comes away, tests it, comes away, tests it, eventually fails completely, comes back down, back to these 2 arrows. So there's now support. So what's happened, and you can see it kept testing it again. A lot of indecision there. But again, this is sideways action. Look at it, it's consolidating left and right, so or up and down even. So from left to right you go, look, it's just consolidating in a box. Sooner or later this is going to break out one way or the other, up or down. Now because this is a strong sector, I'm trying to highlight the fact that it's more likely to break up than down because the sector is strong. Okay, let me clear this up. Consolidating, and let me just draw in a couple of points in here. 50 period moving average, you'll see I talk about that a lot. So this is quite important. Ideally you want to see a stock above its 50 period moving average on the daily chart. So we can see when price was down below the 50 period, down here, you can see it was a lot more weaker, but it went sideways, as I said, and then if you look, this is the 50 period moving average. Price is now above it, clearly above it. That's a nice sign to improve your chances of success. And the fact this is in a strong market, we need to see a break of this high, really. So here's another trade idea. So for the official breakout, it needs to move slightly higher above this line, and then your next resistance would be up here. But me personally, I would like to try and get this if it went back down and tested this level again. It seems unlikely to do that, but it might do. That is $2.50. If you saw it $2.50, that's a potential trade idea, because you've got that nice moving average which will slowly move there. Bounce off the moving average, you have strong support, you could get your stop loss there, low risk trade, and then if it's right, it could potentially move much higher. If it's wrong, you know where your risk is. Okay, that's another one. Higher risk, higher return. I hope I haven't overcomplicated it. I won't keep going on because I think I've explained it. Strong support there at $2.50. Okay, over to the next stock now. Ticker symbol AE up here in the top left. This appears to be a cup of handle. Again, more risky. It's not fundamentally as strong as some of the first stocks I talked about. Earnings is due on the 4th of March on this stock. So, if you look at this, you think, well, that's a rubbish cup of handle, because I agree, I don't like the look of it personally, but it appears to be valid. Here is your high and then a base forms, and then this is the handle here, and then this is your pivot point. So ideally you want to see price above this dotted line to validate a breakout. But what I'm trying to do with this stock is to potentially give you an entry before it moves. So this is more risky because ideally you want stocks to break out or be very close to the breakout area. So the breakout area is up here, but we're all the way down at 30. So let me show you on the daily what I'm seeing, and again you can make an informed decision. So this is the daily chart. Definitely more risky, this stock, as I said, but I see this along here. So that's not very well drawn in, but I'll just try and do that one more time. There we go. $29. Why do I like $29? Because look, price came up to it, fell away, came up to it, started struggling and broke through it, and it's kind of respecting its $29 area. Let's see if the moving average lines up with that. 50 period moving average. Okay, this moving average will slowly creep up. So I think a low risk trade on this one would be $29 here, thereabouts. Again, this is more shorter term stuff, and you could probably get your stop down here somewhere. That's up to you. $29 looks strongish because of the fact that we're above the moving average now. You could use this moving average as support, backed up with this obvious support line here. So $29 roughly. I think that this could be a potential buy opportunity, but remember your money management and remember to get out if it goes wrong, because absolutely none of these stocks I'm talking about are guaranteed to pay out. I'm just trying to show you where the market's going, because the money is flowing into this oil and gas sector, as I'm sure you all know, because especially in the UK, our bills have gone up unbelievably in the last few months. So I think it's up 50% because of the price of oil and gas. So it's not nice, painful for us, but why not try and make some money on the back of it if you can by buying stocks in that sector. So there's that one, $29. Again, I have to reiterate, more risk on this type of stock because the fundamentals are not as strong. Okay, final stock. Let me bring that up for you. So this one, CVI, is a ticker symbol up here. This is another riskier stock, but you can probably see it here. This is another cup and handle basing pattern. Now, I don't just make this stuff up, guys. I analyze a lot of stuff and use software to help me find these patterns. I'm not going to reveal everything, but it does take a lot of time and effort. But anyway, this is a nice looking pattern, not as strong as the others, as I said. Earnings is due on the 22nd of February. You must do your own due diligence on every stock. It's up to you. I'm just showing you all the technical patterns and the strength of the industry. So this is the weekly chart. Let me go down to the daily chart now. I always start with the weekly just to give you a bigger picture. So here's your daily chart. Your official buy point would be up here. Now again, I'm trying to get you in potentially on a earlier entry point. That earlier entry point would be, if I look at this, let's see, let's draw a moving average. I haven't done this. Let's see. Okay. Ideally, we would like to see price trying to bounce off this moving average. So it'd be nice if it creeps up a little bit. So, and it meets up with this previous. You see where these candlesticks, these little wicks, are all touching the same area. Just want to try and get in around there. So that's about $18.50. And then the moving average should catch up with this area here. So we have this potentially, or it might just break out. So safest area for me on this one would be around $18.50ish, and then your stop loss would just be down here, because, and you must always remember your money management, guys, and the fact that you're trading in a difficult market. So this is, you just don't want to take any risks. You can look at it long term, get your, as I keep talking about, when you get a base like this, you can potentially put your stop loss down there, right? That is the safest place to put it, but it means that you have to adjust your risk management, and it's nice to get into trades and just breakout trades, but those are longer term and they take longer, so your stop loss has to be longer. You have to adjust your position sizes, blah blah blah. That's up to you. What I'm trying to show you here is if price comes down to this $18.50, well, $18 to $18.50 level here, that would be a shorter term trade, and then you just get your stop loss there and get out if it goes wrong. If you want to do the longer term stuff like I often do, I always have my stop below the base of the cup. It's just the safest place. Otherwise you find yourself getting stopped out all the time. For example, let me just, I know I'm going on a little bit, but I'm just trying to highlight and explain and educate people. If this broke out up here, right, which would have been an official breakout, because it did try to break out. So here's your high point here. You can see that price did try to break out there, and the volume was spiking here as well. But then it comes all the way down. Most people just, you'd be stopped out. 10% drop, stopped out. So why not just try and get the safest possible entry? Safest possible entry based on this current chart pattern would be around here. In line, this moving average catches up along with this support line. Take the trade. If you're wrong, get out. Or look at it exactly as I keep repeating myself, but look on the weekly. That's the base. Absolute safest place to put your stop would be below the base here. And if it gets hit, then you definitely need to be out. That's like an emergency situation. Get out. But I'm just trying to show you some shorter term stuff here. Cup, handle, consolidation, might be about to move. That's the final stock, guys. I've covered a lot of information there. I think I did say the earnings on that one, 22nd of February. You'll notice that every single stock, the earnings reports are almost, they're all within weeks of each other, so sometimes days. So just bear that in mind. Earnings can change everything. There they all are, guys. They're all in the same sector. They're all strong. They're all good stocks. The last few are definitely more riskier than the, let me just count them, 1, 2, 3, 4, 5. The first 5 stocks I talked about are the strongest. They have strong fundamentals, strong technicals, etc. The last stocks I talked about are more risky, lower price, up to you. There's all the information, guys. Hope you enjoyed the video. If you like what I'm doing, please like and subscribe. This was a longer one, very technical. Hope you learned something. Speak to you soon.